before the market moves or the economic highs and lows. I'm joined by an exceptional panel. The former member of the Monetary Policy Committee of the RBI, Dr. Ashima Goyal, is with us. She's been seeing enough economic cycles to separate all the noise from the real momentum. With her is Sudip Bandyopadhyay, the Group Chairman of Inditrade Capital, and he's going to help us decode if Dalal Street has delivered for investors this fiscal and what we can expect in FY26. And Santosh is also with us, Head of Research and Partner at Manhattan Venture Partners, and he brings his global perspective on how India is stacking up against emerging markets. But thank you all for joining us this evening. Let's get straight to it. Dr. Goyal, we were going through the RBI's March bulletin, and it seems to suggest that the Indian growth story remains on track, but there are the global uncertainties, not least of which, of course, being the tariff wars. Would you say that India is well insulated right now from external shocks, or are we still vulnerable, you think?
I think the post-pandemic experience shows us that we can counter really large external shocks. And we are already seeing certain moves towards counter-cyclical policy. The tightening that was there last year has been relaxed, which is going to give a further fillip to demand and to growth. We are seeing good signs of growth recovery. And the global uncertainties, it's not certain that it will be really negative for India, because we are involved in this negotiation. And in any case, India has a very diverse economy. We are not so dependent on the US market. So overall, I think things are well poised for India.
Mr. Goyal, you believe that we are strongly positioned at this point on the economic front, and a large part of it has to do with the domestic market, and we'll talk about that a little bit more. But Mr. Bandyopadhyay, the Nifty in FY25, up 5.2%. But PSU banks and energy stocks, those have taken a beating. How do you rate this fiscal for the average retail investor?
Anything great for the average retail investor. Unfortunately, till September, the momentum was significant, and post-September, the massive FII selling. And of course, along with that, the domestic macro factors also started cooling off. We did see a bit of a slowdown in demand, initially in the rural India, then in urban India. That led to corporate performance also deteriorating. I think combination of this, led to market really underperforming Asian peers and other emerging markets. But we have to remember that this growth and this return is on top of what we have what Indian market has given over the last couple of fiscals. So it was fantastic return in last fiscal. Unfortunately, this fiscal, if you compare our growth vis-a-vis other markets, it's not that great. But I think the way forward is good. Yes, absolutely, there are a lot of uncertainty due to US tariff tantrums, but things will settle down, and US and India are not huge trade partners. So the impact on India will be limited. Also, India has a diverse and very well growing domestic business activity. So the consumption demand and other demand from the domestic market is significant. There will be sectors and pockets which will get adversely impacted if a all-out tariff war breaks out in the world. Even if India escapes, I think world economy slowing down will have a negative impact on India. But fundamentally, I think India is doing things right. Indian inflation is coming down, and that gives RBI scope to reduce interest rate, which should help the markets.
So the external shocks could still rattle Indian equities. Mr. Bandyopadhyay, that seems to be clear from what you're saying. So we are not completely insulated. Mr. Rao, do tell us, the FIIs, they've been net sellers. For most of the fiscal, they have been net sellers. But March has seen this turnaround, and it's a significant reversal. What do you think has changed? Has there been a fundamental change? And is this change, this trend that we are seeing right now, do you think that's sustainable?
Yeah, good morning from my end. Yes, the number of things going on at this point. I think China's story is not too much, not very intact yet. We don't know where that's going. For a while, we saw FIIs flowing in there, or a lot of money flowing in there, but there are questions about where exactly it's flowing. Is the fundamental story still good, or is just the stimulus and the talk just kind of just propping up the economy there? Because China is a very weak story. I think India's fundamentals are really good, And India was never bad. It was just a relative story. And relatively speaking, India was an expensive place. It had run up quite a bit. So money was flowing out. US was relatively stronger in the risk reward basis. Money was flowing to China, like I said. But now I see the wind blowing back. I see some data coming out, the headline data. I don't go too granular, but at the headline level, India's data seems to be very good. Inflation is slowing down. Things are growing up. The demand is growing. So there are a lot of things in favor of India. I can see FYI coming back into India pretty soon, especially if the dollar weakens here and the US, the pocket of uncertainty in the US market kind of favors India and FYI coming to India. I think that's how I see it as far as FYI concerned.
So you're more sanguine about the fundamental Indian growth story than you are about China, where we're seeing a lot more momentum pick up if you look at the Chinese markets. But Dr. Goyal, you tell us about inflation. The RBI is expecting it to moderate in FY26. But what's your take? Are we looking at an RBI rate cut sooner rather than later?
Yes, I think more rate cuts are scheduled because inflation has come below 4%. We had core inflation, that is trend, long-term inflation, falling since a long time. It had reached its lowest ever level even last year. But vegetable prices, those sort of spikes that we saw. But I think that over the next year, because of the good monsoon and various measures that governments, different, we hear about the Punjab farmers, but I think many states now are allowing more farm gate sales, improving marketing. There's a lot of diversification of crops by farmers in many states, and they are making much more money than those who sell at MSP. So I think we will see better marketing of vegetables. We may avoid the kind of price spikes we saw last year. So that inflation should come down. And also, I think that the idea of 4% is becoming internalized because since inflation targeting started in 2016, inflation, the first MPC was really around 4% average. Then with the pandemic and supply chain snarls, but over the last 4 years, it's 5.6%, below 6%. Now it's come down below 4%. So as more and more price setters internalize, I've done some research that shows that firms are not passing through price shocks as much as they used to, commodity supply shocks as much as they used to earlier. So we might see, and I just wanted to say, might see that inflation stays around 4% and interest rates can come down in a sustainable way. Moreover, if interest rates are really much above 1% in real terms, that tends to slow. Last year, we had a cyclical slowdown because investment fell, construction growth rates fell, manufacturing, all these are interest-sensitive components.
Yes.
So as we see a reversal of the interest rate cycle, real interest rates coming down, all this will also get a boost. And we need to internalize this, that real interest rates, looking at a bit of forward-looking view of inflation, should not rise much above 1% in the Indian economy.
But the way that you've seen inflation move, Dr. Goyal, over the last fiscal and what it is projected to be, I'm looking at the government's economic review for the month of February as well. And I'm just trying to understand how inflation stacks up against disposable income, because they are talking about the changes in the personal income tax norms, and that is likely to improve disposable income plus several other measures. How do you think the two stack up with the way the economy is moving and how much disposable income people find?
Right. That was a very timely move because we saw some slowdown in consumption.
Yes.
But a reversal also. Actually, people were talking about this K-shaped recovery and consumption is really, it's only at the upper end. But that's not really true because I was just seeing a recent Cantor survey that says while the big firms volume grew at 2 to 3%, smaller firms have grown at 5 to 7%. That are catering to the price-sensitive segments. So India remains a market where if you offer a good price value, you will get a lot of consumption. The lower-end consumption is there.
Right.
And certain firms are making sure that they supply at lower prices. And as I said, this price markups as a whole are softer. There's less pass-through of supply shocks by all firms.
Right.
So I think that, and the idea of 4%, as it becomes internalized and is
Yes.
set in wage setting, real wages haven't grown. So there's no second round high inflationary pressure in
Right.
India.
Right. So, yes, but wages have remained stagnant, and that has a telling impact on the entire consumption story. But how do you see investors moving, Mr. Bandyopadhyay? When you look at the way that they have reposed faith in the markets, the mid-caps, of course, we've seen them outperform the broader indices. But do you think that trend is likely to continue, or do you think investors are going to start rotating into large caps? Or do you think they should even at this point?
So, Vikram, a couple of points. One is financialization of saving is real. It's happening as we speak. The trend is very, very clear. And in spite of the market fall, the SIP, little bit of reduction here and there, but trend is definitely there of financialization of saving. And that's a very good thing to have happened for Indian capital markets. And that is kind of holding the market from falling, when FIIs were relentlessly selling. Market did correct, but it would have been far worse if SIP flows had stopped, or retail investors would have started also selling, but that didn't happen. And DIIs continued to support the market when FIIs were selling. Now that's point number one. Point number two, as far as mid cap, small cap, and large cap is concerned, I think there is a maturity coming, whether it's a retail investor or even fund managers who are, even if it's a small cap fund, they are going to the extent possible in large cap and mid cap, under the overall norms. So if a small cap fund, they have categorized that up to 30%, they can have other cap stuff. They are probably filling up that 30%. For retail investors also, they're looking at buying large caps as well.
Yes.
I have seen that trend getting played out. I don't see any problem in mid cap as such, because they're very large and good mid cap stocks as well. And probably in some other markets, they would have been classified as large cap already. So there are potential in small caps as well.
Right.
I think what is important is maturity, which is coming. Either if you are investing directly as a retail, you should understand what you are investing in. And if you are not doing that, then you are trusting the fund manager to do the job. I think both are good.
Right.
As long as you do that, I think we are fine.
So you see the market maturing, but also when you are not hands-on, it makes more sense to let a fund manager. So that remains a fundamental that you believe should not change. But if you look at how the equity markets in India have performed, Mr. Rao, and you made a point earlier as well, when you look at the kind of returns that India has turned in, they seem to be modest compared to, say, the Hang Seng's 42% surge. So in your opinion, what's driving this outperformance in China, and are there lessons in it for India?
Yeah, I think China is coming off a low base. For a while, it was beaten down. There were a lot of issues about China. I think picture is getting slightly better, but the consumer is still weak in India, in China rather. And they are now trying to focus more on the internal consumption side as opposed to the export markets. So I think that's there's some transition going on there, because they don't want to be exposed to the tariffs and all that. So I think that there's a lot of changes going on there. So it's coming off a low base. So it's up, but I don't think it's out and clear at this point. They still have a lot of issues to work through. So I feel it's more a temporary bounce back. China is not at a sustainable path yet, because they need to resolve a lot of other issues as well.
Yes.
So that's what I think.
Yes.
So China was outperforming, but I think it's temporary.
Fair enough. But Dr. Goyal, talking about the trade wars, these tariffs that we're hearing about from Mr. Rao, they're back in focus under Trump 2.0, and there's no looking away from them. How do you think they're going to impact, even possibly derail India's economic momentum in FY26? How real is that threat?
Well, I think we just look at the way markets are voting. As soon as Trump came in, and there was this view of US exceptionalism, that US is going to do very well with all the government reforms and tariffs, etc., etc. And there was a flight of capital back to US. But we are seeing a reversal of that, a realization that that these kind of policies need not necessarily favor US that much. So and I think for India, we have the advantage of diversity, that US is not such a large trade partner, but at the same time, we have a very long-term sort of coincidence of interest with the US. And we are seeing this in the negotiation, which I think should bring out some really good results. And overall, Trump might take credit, but I think in India, since the reforms in the 90s, we have been working towards lowering costs for industry. And recently, a lot of success in terms of ease of doing business, lowering logistic costs, GST, and those big octroi lines going. So our firms are becoming more competitive without a protection of tariffs. So lower tariffs will benefit the consumer, and at the same time help our firms, force our firms to be competitive. Maybe we need some protection in agriculture or other labor-intensive areas. And because I think the US has a lot of green box subsidies. The US Treasury supports US agriculture in many ways. So in this negotiation, they should bring that out, that if you are equalizing tariffs, US wants to look at non-tariff type of barriers. But US agriculture gets a lot of support from the US government.
Yes.
So I think we'll be able to negotiate adequate protection for our agriculture, which is what is required.
Right. Yes, even as we are talking about reciprocality in taxation, as far as the US is concerned, it's turning that much more protectionist, even as India at this point in time will, and we're seeing that happen as well. We are lowering our taxes on several counts, on several kinds of products, bourbon, whiskey being one of them. But Mr. Bandyopadhyay, now that you're seeing these FIIs dipping their toes back into Indian equities, tell us about the sectors that are most likely to benefit from fresh foreign inflows this time.
Well, I think a couple of sectors the FIIs are definitely looking at. One is the entire infrastructure and construction. And now that has got multiple legs, whether it's a cement, whether it's a EPC companies, whether it's the building material companies, whether it's the irrigation and other construction companies. So this entire construction infrastructure space, which is a focus area of government, a lot of capital expenditure is happening, private sector capex has started. That is one area which will be definitely of interest. The second area of interest is power, and we are seeing it. We had seen it earlier also. I think the power-related entire companies, the entire ecosystem of power, whether it's a generating company, whether it's a power financing company, whether it's power ancillary, that will get a lot of funding. The third segment, which I believe will start attracting a lot of FII money, is defense. Unfortunately, the valuation is still not cheap. But I think considering that the world is thinking of rearmament, Europe is already doing it. Many other countries are looking at significantly scaling up their armed forces and arms and ammunition. I think Indian defense companies will have a great time going forward, considering the cost benefit which Indian manufacturing can provide to these countries. So I think defense is one sector which will attract a lot of money. The last but not the least, I strongly believe that Indian pharma will have a bright future. There is turbulence now because of tariffs and counter tariffs and things like that. But at the end of the day, any standard pharmaceutical product manufactured in India vis-a-vis manufactured in US, the US probably will be 5-6 times more costly. The same product manufactured through the same process. So under the circumstances, tariff can only do so much. It will have a significant positive impact on pharma, and we strongly believe that pharma is in a space where IT was 20 years back. I think Indian pharma has the potential to become like Indian IT, which is the worldwide recognized, and that will happen. And FII money will also come in a big way in Indian pharma.
So looking at these sectors that Mr. Bandyopadhyay is pointing out, Dr. Goyal, when you consider the government's entire push or being very vocal about India becoming this top 3 global economy, this is going to require a big policy push as well. If all the sectors have to perform and be that much more attractive, what policy measures do you see that will take priority in FY26 if we were to consider the key areas where against tariff wars, where against the potential that India's manufacturing prowess has to be built? How do you see the policy push coming through?
Yes, I think we do tend to benefit by a diversification of supply chains from some countries. And we need to make sure that our tariffs and so on and other costs are such that these supply chains are really efficient. We're moving in that direction. But I think a big thing is AI. And here there are people who are saying that this might hurt the shifting of the outsourcing to India and of services and so on. But I think that's not correct, because always technology creates many more opportunities. And we have a lot of young people. So we need to make sure that AI is used to increase productivity, Indian skills at the lower level, where there are some skill disadvantages. And that would make Indian industry much more productive.
Indeed.
And so all these factors, the other main, as a macroeconomist, the main issue I want to flag is that Indian growth has been volatile post-reforms.
Yes.
And this is because we did not do enough to smooth external shocks. During our period of opening out, we had faced a lot of external shocks. Financial crisis, pandemic, also Ukraine, the conflicts.
Yeah.
But at that time, earlier on, we did not have enough diversity, buffers, and confidence in counter-cyclical macroeconomic policy.
Right.
Post-pandemic, we have seen we've been able to do it. This has worked. So we need to alleviate all the supply side bottlenecks, work towards increasing productivity. At the same time, keep our demand up, even if there is a global slowdown. Keep it Indian, and we have enough diversity to be able to do this. Smooth shocks, and firms should internalize this. They should have the confidence to keep building for a growing economy, because they should have the confidence that growth is not going to fall.
Right.
As we've seen in the stock markets, there's enough domestic diversity to prevent a really sharp fall, even with such large FPI outflows.
Indeed.
So we have that same capability in the macroeconomies.
That's right. So that kind of resilience needs to be built in, and policies will help. But Mr. Rao, globally, central banks, they're still debating rate cuts. So how do you think Indian markets should position themselves in this world of monetary uncertainty at this time?
Yes, I think what you're going to see here, especially from a US point of view, I think at the Fed chair in the last meeting, he said 2 cuts are still on the cards, 2 cuts this year and 2 next year. A lot depends. He's moved his eyes away from inflation to the growth side of the mandate. So he's focusing on that part. He's reduced the GDP slightly to 1.8% from 2%. So I think he's more concerned about that, but he's on a wait and see mode as far as where the tariffs will land and where the after effects of that will be. So at this point, it's still kind of wait and hold. 2 cuts are still on the cards. So I think that will help rest of the market as well, because if they cut here, I think that's good. It's good for US rather, but it's also good for the dollar and everything. So it's going to have a mixed reaction. Let's wait and see. It's a combination of events. We want to see where the inflation picture comes. Inflation expectations, that's high. Inflation itself is kind of under control, but the expectation is still kind of in a flux. People are still not sure. So I think that's going to be closely watched. The rate cuts, 2 cuts this year, 2 next year, still on the cards. And I think we'll see where how that affects. I think it should be net. It should help the US for sure, but I think it'll flow into other markets as well.
All right, I'm going to wrap this up by asking very pointed questions that require very short answers. Dr. Goyal, to you first. One policy change that could supercharge India's economic growth?
I think the rate cuts that are coming will really help.
Right. Mr. Bandyopadhyay, one sector that you'd go overweight on right now?
Well, I think I will be going overweight on construction and infrastructure.
Mr. Rao, India versus China, which is the better bet for equity investors in FY26?
India, definitely, because China had its chat GPT moment with this deep seek, so that you saw the bump from AI and all that, but that's got to settle down. I think India is more sustainable in the longer run.
Mr. Bandyopadhyay, the biggest investing mistake that people made in FY25 that they should not make in FY26?
Again, blindly investing based on rumors in small cap stocks. I think that's a big mistake. We keep telling again and again, please don't do this.
Right.
Either you do your research and then invest, or trust a fund manager.
Fair enough. Fascinating discussion. FY25 certainly has been a mixed bag. Steady gains for the indices, but then sharp divergences across sectors. FII comeback, now that's a developing story, even as India's growth momentum looks solid right now from everything that we're hearing from our panelists, but there are external risks and those remain. And as we step into the new fiscal, the big questions are, will rate cuts spur further growth? Will mid-caps continue to shine? Are FIIs here to stay? And we'll be tracking all of this and more in the months to come. But a big thank you to my panelists, Dr. Ashima Goyal, Sudip, Bandyopadhyay, Santosh Rao. Thank you for joining us with your sharp insights this evening. We'll keep up the momentum on all these market-moving discussions. But thank you for joining us tonight.